Check
All
my
right.
edit.
I think we're streaming.
All right, cool. What's going on, guys? I cannot read chat right now. I'm gonna have to open up like YouTube or something just so I can read this. What's going on? Been a while since we did a live stream. I can't read chat, so you're gonna have to read it.
Well, I'll have the chat going on Market Disruptors. You're going to have chat going on I Love Crypto, so I won't be able to see both of them, unfortunately.
All right, let's see if I can pop out.
But yeah, it's good to get together and do a live stream with you. I know everybody's wishing we get together and discuss things a little bit more often. We talk every day, but we don't get on live streams enough. So
yeah, we've been busy building, man. It's tough.
Well, that's what you do in bear markets, and that's what the crypto market's been doing. They've been building. So, everyone's focused on price. We've been building. The market's been building. So it's good from that perspective.
I'm gonna see if I can pop the chat out so it'll just be appear on my screen here.
All right.
Here's chat down. Shit. Okay, hold on. Sorry, guys. Technical. Hold on. I broke my monitor cable when I was setting up my office this morning. There we go. Okay. All right. All right, cool. I got it now. Let's move this over. There we go. All right, cool. Yeah, man, we've been so busy putting everything we got into building out our platform. It's been fun though. There's so many cool updates coming. I mean, besides like our kick-ass website we just built out, but
yeah, I mean, we've been building not only that, but a ton of education. So I know between the two of us, we put out like a ton of reports from the video series I've been doing about wealth transfers and market cycles, best cycles to invest. You've been doing a lot of trading stuff and tools and things like that. So I think we've both been doubling down on what we're providing, trying to provide the community as well.
Yeah, so markets are crazy. Obviously, we've been navigating them as well as anybody can possibly navigate them. The tricky part with this is when I traded like equities or Forex, there's always a really good way to hedge. And in crypto, the ability to hedge is really difficult for retail traders in the United States. And I think that's really the tough part about trading cryptocurrencies in this market right now, especially after such a long extended bull market.
Yeah, I think age-old principles kind of remain the same, and so I think like investing principles always kind of follow different markets, and some of those being like markets move money from impatient to patient, so like being patient. Really, good investors will always know when the odds are against them or when they have the odds, and so like when the odds are against them, they're kind of laying low and being careful, and then going heavier when the odds are with them, and then really just kind of protecting your position sizes and your allocations, right? So I see all these people saying they've gotten wrecked. Like people are like crying. Some people saying they're committing suicide, like crazy stuff, like they're getting wrecked. And hopefully nobody should ever really put that much money into any one asset that it could destroy their whole, all their assets.
I mean, we did a video almost 8 months ago, and we called it the most important video for success in crypto trading and investing. And it was all about portfolio allocation. And I think that's one of the most underlooked assets. I mean, modern portfolio theory is a real thing. But one of the things with hedging, and I'm working on this complex hedging video for our members, but one of the things with hedging is portfolio allocation, diversification. And that's one of the things with finding non-correlated assets. But right now, I mean, people are like, wrecked in crypto, but the top, all the FANG stocks have lost $1 trillion since the start of January of investors' money. I mean, they've lost the entire market cap of crypto. And that's just, Facebook, Amazon, Apple, Netflix, and Google. That's just the FANG stocks. The total stock market's lost 13 trillion since January. I mean, that's 13.5x. I think the total crypto market cap got to what, just under 800 billion, 850 billion or something like that. So I mean, we haven't even scratched the surface of what's available. But I did post a picture today in the VIP group where it was like the top stocks were 99, 98% off their all-time highs in 2001, 2002. And so, yeah, it's all about the time horizon. But I mean, what do you think that Bitcoin is under attack right now from the global elite? I mean, that's been one of my running theories for a while. I've got a couple theories. We can kind of delve into some of them, but.
Well, I think it definitely is, and it's not anything new. As a matter of fact, you were one of the first people talking about this a year ago, when the on ramps got taken out, right? Nobody could get money in. The advertising got shut down, so it wasn't under attack then.
I think Bitcoin was at like 19,000 because that was in December when we first started talking about doing a podcast together, and yeah, it was like. Once they started shutting down fiat liquidity, I was just like, man, this thing's going to go pretty far down because no new money can get in. That was when Wells Fargo shut it down, Citibank, Bank of America, massive companies were Chase. I think Chase even had it.
And so for everybody watching, like I said, principles are really basic, and so the principles of a market stops going up when there's no more buyers. A market stops going down when there's no more sellers. And so the amount of people that were in crypto or in Bitcoin last year was 1 or 2% total, right? So a small percent of people. And as that market started going parabolic, more and more people started jumping in, so the market kept going up. But as soon as what Jacob's talking about, they shut down the on-ramps, nobody could get money into the market, and all the advertising got shut down, so nobody could even hear about it, so no new people could get in, and then there was no more buyers, and then the market reversed course. And so now we're waiting until there's no more sellers, but the attack seems to continue, right?
Yeah, and the attack, I mean, it's not just from the liquidity standpoint, it's a regulatory attack. I think the IMF called Bitcoin global poison, or I mean, basically
they called it an environmental disaster.
Environmental disaster. Yeah. Now we've got an attack from. So if they can't outright ban Bitcoin, China tried to do that, right? South Korea tried. China tried to do it. Korea is trying to ban exchanges. South Korea is banning ICOs. But the thing is you can't really ban Bitcoin. I've said this multiple times on multiple live streams. The only way to ban Bitcoin is if you basically ban the internet. But what they can do is they can go after the infrastructure of Bitcoin, and that's what it seems like they're doing right now. They're in Norway. We just saw they're targeting Bitcoin miners, saying that it's a environmental hazard, and they're basically charging more electricity to mine Bitcoin. And there's this whole thing how it's going to cause global warming, yada, yada, yada. But the biggest thing is like what so many people aren't even talking about is the fact that, like we were just talking about it, the banking infrastructure, all of these, middlemen, the banks, the warehouses, the server farms. I mean, you're talking like billions and billions and billions of dollars in electricity and waste. I mean, paper, just massive amounts of waste are wasted on that. Just the concept of banking in general, when we've got a perfectly good payment platform that is constantly evolving and building. But I don't think that's a good argument for Bitcoin.
It's a horrible argument, right? So like imagine what Bitcoin is doing, and like you just said, right? Like imagine how much electricity Wells Fargo or Bank of America uses. Bank of America with all their towers and all their banks and everything they have. I mean, Bank of America is using way more power than just Bitcoin alone, and that's just one bank. Never mind the entire banking payment industry. So it's ridiculous. I mean, they're just trying to pull anything they can out of the hat. I just think that, they can continue to attack it as much as they want, but the genie is out of the bottle, so to speak. There are countries that are very pro crypto, pro Bitcoin at this point. There's 2 billion adults in the world who have no access to banks at all, but they have mobile phones. So they're moving into crypto and Bitcoin. And so, the established countries, the Western countries, the US and Europe and whatnot, they can do what they want, but the rest of the world's on it. And it's too late. It's too late, in my opinion.
I agree. But the question is, obviously the central banks, the IMF, they control the monetary supply. And I think that every war in the last 20 years has been over controlling economies, whether that be Libya, Syria, the propaganda against North Korea, all of these things have been fought because every single one of those countries had their own bank that governed their monetary policy. And all of those countries now have basically a central bank in place that's run by the IMF. So they basically have this full reach.
Yeah. And it even goes further back than that. So really, when the central banks got going at the turn of the century back in the early 1900s, really that's what's enabled the wars to even go on like they have. Like World War I never would have gone even close to as long as it had if countries weren't able to just create fiat money out of thin air. So it's the devaluation of the currency, and that goes all the way back to the Roman Empire. The Roman Empire stopped growing because they ran out of money, and so they started to devalue or inflate their currency. It used to be pure silver, then it was 90% silver, so they could make 10% more, 80% silver, etc. And so all these wars have continued because of the monetary policy we have, and then like you're saying, the recent wars are over. It's all over money.
Yeah, I'm kind of pissed off, to be honest, about this whole Bitcoin Cash fork, because back in August of last year, the Bitcoin Cash fork really created a lot of investor distrust in everything with Bitcoin, because no one really knew like what a fork of that magnitude was going to do. And then Roger Ver says basically he's all about creating a cryptocurrency that's going to change the world, peer-to-peer electronic cash, and blah blah blah. But man, the propaganda and the we're going to look back on this moment with Bitcoin Cash, ABC, and SV, and also just the Bitcoin Cash fork from Bitcoin. And that's one of those things that if they had just not done that, I think that we would be in a much, much stronger position than we are now. And it just goes to show you, like, one individual cannot control Bitcoin. Andreas Andropoulos talks about it a lot, but everybody always wants to control Bitcoin, right? They want to make it their own, whatever their own looks like, right? So they don't believe that Lightning Network is good. They don't believe that. So they try and fork it. But I just feel like what they've done with this fork and how they've gone about it is just like really, really, just created so much confusion to new investors and traders in this market, especially just trying to trade Bitcoin Cash, ABC and SV, and people that believed in Bitcoin Cash. It's lost like 30-40% of its value in less than a week.
Yeah.
Because of this fork, man. It's crazy. And it just shows you like the people that kind of got into this stuff. But
I don't really care about the forks that much. A lot of people think that creating a fork devalues Bitcoin. So every time Bitcoin gets forked, Bitcoin loses value. And I don't believe that. Like imagine Coca-Cola, for example, right? Every grocery store makes their own version of Coke. It doesn't take any value away from Coca-Cola, the brand. So I don't see that. But what I do see is, especially like in a scenario like this where now there's massive fighting and then they really, Craig Wright says he's going to crash the market, and they really have driven the price down. And what that does is that gives fuel to the regulators. That makes the regulators want to mount up. The SEC now wants to protect the people because of what they've done. So the fork itself, I don't really see that as being a problem, but the fighting that's been created because of it it has massive implications beyond just that fork.
it's just so juvenile. But I want to touch on this just a little bit. I think that Craig Wright and Calvin Ayer are smarter than they let on. Craig Wright, he said something in a quote on Twitter, something like, if they think you're a madman, then you've got them exactly where you want them. And I think Trump uses the same tactic as well. He's so over the top and crazy that like the actual play is over here. And Craig Wright, what they did was when they said they had all this hash power and they maybe spent a lot of money right before but then they didn't have any hash power. And so they didn't spend nearly as much money as Bitcoin ABC did, which is Roger Ver's camp. But what did they get out of it? They got their own token on every single exchange that's known to man. They're on Coinbase, Binance, they're on Bittrex, Poloniex, Bitfinex, BitMEX. They're on all of the different exchanges, and they only spent like maybe $1 million to do that. Now they've got their own token that they can change, upgrade, shift the protocol. They can call it whatever they want it, but now they're on every single exchange and they can do whatever they want with it. I think it was one of the most genius plays I've seen in crypto to get their token on all those exchanges in less than a week. And now they're just saying, okay, ABC, you won your Bitcoin Cash. Well, now we've got our own token. That's what CoinGeek said today. But now they're taking their hash power that was on Bitcoin Cash, and now they're shifting it over to their own token and their own. So to me, that was actually a pretty damn good point, or pretty damn good play that Craig and Calvin ran. That I don't think that anybody even really is even thinking about what they did or how they did it. But to me, that was a pretty good.
I mean, from that perspective, you could admire what they did, but like you said in the beginning, you're pissed off about it because at the end of the day, it was selfish and it ruined the ecosystem. So, good for them. They made some money at the expense of everybody else. But really, they got this token listed, but now they destroyed the whole industry. So what good is that, right? So what is that, like penny wise, pound foolish, or whatever they call it, right?
Penny wise, pound foolish, man. I've said that phrase like my whole life. So I think that Bitcoin is under attack. But any industry that goes up by like 30,000% is ripe for a pullback or correction. And I don't think that crypto's dead. For anybody that's wondering, I think that we are seeing a lot of capitulation. And I think a lot of the reason why we're seeing such capitulation are all the fundamentals that we've talked about before. People putting too much money in that they're afraid to lose. If it all goes to zero, I'm like pretty cool with it. I'm chill with it, just because I took out principal on my gains plus profit that I wanted to lock away and kind of diversify and hedge into other things. And so I think that a big part of the reason why people are freaking out so much, and we've talked about this a lot, is just based on putting in too much money that they weren't comfortable with.
Yeah, I think that's an important segue, but actually I'd like to kind of maybe just pause that for a minute, because I'd like to finish kind of our thought on the attack, maybe then where we think it's going, and then ultimately tell people what we think, how they should play, how we're playing that.
Okay.
But so before we get to that, and that's an important part, before we get to that, I just wanted to kind of add on what you were going to say about, it's not going anywhere. And I just kind of want to add a couple points to that. And anybody who hasn't, on the YouTube channel, Market Disruptors, I'm doing a 4-part series, 2 videos have been up so far. And they're basically talking, the first one was about technology cycles. So, Bitcoin, blockchain, cryptocurrency, it's a new technology, just kind of like the internet was a new technology. And when you invest in a new technology, it's different than investing in oil or gold or stocks. It's a new technology, and they always follow like 4 phases of adoption. And so when you look at these technology cycles, and I break this down in those videos, so go watch those if you haven't on Market Disruptors, but you can see that the money always runs ahead of the technology, and then it takes time for the technology to catch up. And Jacob, you had just mentioned like how a lot of those internet stocks had come down 90-95%, and that's the exact same reason why. The money gets ahead, crashes down, then the technology catches up. And so from that perspective, I think we're on par with the technology cycle. As bad as it is, this is the way they all work, unfortunately. In addition to that, I would say, when you in the investing world, the big institutions, the hedge funds, they have to disclose all their investments, and so most smart investors look and see what they're doing. And in the investing world, we call them the smart money, and we're the dumb money. And so the smart money, Goldman Sachs, Citigroup, TD, Ameritrade, those guys, they have spent billions of dollars to get into Bitcoin trading and crypto debt. So they wouldn't just be spending billions of dollars for something that's going to zero. So from a few perspectives, one, the smart money is doing this, so we're following along. Two, this is how technology cycles work. But what happens is we get over anxious and we expect too much too soon. And like the famous pets.com example, the big internet company that blew up in 2000 and lost billions of dollars. It was a great idea, but there was nobody online buying anything. So too much too soon. So we'll get there. I think we'll get there. I'm happy. I'm confident.
I want to touch base on that a little bit, and I want to say hi to Crypto Love. Crypto Love's hanging out in chat.
Yeah, what's up, Crypto Love?
We got a bunch of people in chat right now. We got Def Swo's in here, Litecoin Bull, Luminary Wins. What's going on, guys? Sergio, I'm reading chat. I'm just focusing on the conversation. Appreciate it, guys. We're going to answer some questions at the end, but so my thing on that is Bitcoin is not like traditional markets. Okay, if the banking sector was Bitcoin, the banking sector would have burned already. They would have crashed and burned. The only reason they still exist is because we bailed them out. The US taxpayers paid billions and billions and billions of dollars on a too big to fail banking system that got over leveraged on fractional reserve banking, and they bought junk bonds, junk derivatives, a complete derivatives market based on, nothing, especially the housing market. They were buying, bad credit swaps. So are they really smart money? You know what I mean? I think we're the smart money because we're buying, Bitcoin. And I think Bitcoin, to be honest, is the best banking system that exists right now. The government can't take it from me unless they torture you or there's been some FBI cases where they said you can do 20 years in jail, or you can give up your Bitcoin and do 2 years in jail. That's one way that they're getting Bitcoin.
Hey, real quick, just for that. So they always say you can't beat a wrench, right? So if somebody holds a gun to your head, you're going to go with your keys. But hardware wallets like Trezor, you can set up multiple accounts. So you can have 2 passwords. So, okay, fine, here's my Trezor, plug it in, here's my password, and it gives up your dummy account with just a couple coins in there. They think they've gotten everything, and that's it. Meanwhile, your other account is still protected, and then they take your Trezor with the password, but you can restore your primary wallet with your seed. So anyway, a little tip on that.
Yeah, no, but so at the end of the day, though, these banks that are shitting on Bitcoin, saying it's, this, that, and the other, these are the same guys that are controlling the metal markets, that are manipulating equities. They're getting $1 billion fines every freaking, month about insider trading tactics, about, but basically they're bankrupting the lower middle class in every way, shape, and form possible. And 14, we did a short film that we didn't ever release, but $14 trillion in debt was wiped out in a couple of days in 2008. And people are calling crypto a scam. What happened though? Did the bankers go to jail? Did they get arrested?
Nope.
No, they got big ass bonuses, and they're doing it again. They're doing the same exact thing that they did before. So we're supporting a better system. That's it. We're supporting a better system, and that's why I would prefer to have my money in Bitcoin, because the banking system in and of itself preys on people. I don't want to support Bank of America. I don't want to support Wells Fargo. These people have been destroying the middle class for 20, 30, 40 years.
And that's exactly right. It's and that's why, like, yeah, Bitcoin was created to be like a peer-to-peer like payment system, like a cash system. But at the end of the day, like, Bitcoin is so much more than a payment system, because PayPal and MasterCard works just fine. It's the banking system that you're talking about, Jake, right? The underlying system that needs to be changed. And as you're saying, I mean, I would almost say that I don't know about every, but almost every problem that we have as a society, as a world, all ties back to money being unsound.
Yeah. So one of my other theories, now that I got off my banking rant, but one of my other theories is that, so what's happening with oil right now? I've talked about this a few times, but what's the price of oil doing?
Yeah, so I'm an oil investor, and so that's something that I like. I've done a lot of work there on oil, and I actually own some oil, some interest in oil field. The prices have come down just recently. One of the oil fields that I'm a general partner on, when we put the prospectus together like a year and a half ago, oil was like $40 a barrel. Recently had shot to like $70 a barrel. I think today it's somewhere back in the 50 range. Oil's down. And part of it's because that's just as manipulated as anything else, right? You have Saudi Arabia that sits on all this oil, and they threaten to flood the market. And if they flood the market, the price drops, and then all of a sudden they restrict the market and the price goes up. So, all these guys, they want to tell you that Bitcoin and crypto is manipulated. Everything, all these markets are manipulated. JP Morgan manipulates the silver markets. So anyway, that's what's going on with oil. But I think, the long term is positive for energy, right? We're always going to need energy, so that's why I continue to invest in it.
And that's, yeah. So what I was getting behind that is, everyone keeps saying when Bitcoin goes under $6,000, there'll be no miners left. And to me, it's just about efficiency and game theory, right? There's always going to be more efficient, miners. And that's going to come down to building better mining equipment, getting cheaper electricity, finding creative solutions. Like, I remember there was one that basically built it in like a bunker, like a massive mining operation. They built it in a bunker in Siberia, so it was always cold, so they didn't have to pay any money for like cooling. So
the thing is, though, is Bitcoin is genius. It's genius. It's cryptography. It's political, but there's also game theory. And I think the way that it was designed is that if Bitcoin becomes unprofitable to mine in some areas, then those people drop off, and then it makes it more profitable for the people that stay on. And then it becomes profitable enough that people jump back in, and it's kind of like a free market. And the price always finds its equilibrium. So just because it's not profitable for some, they'll jump out, and then it's profitable for others.
Yeah, the other thing is, Bitcoin was for a long time it was basically called spec mining. So like, you have speculative investing. Spec mining is where you're mining a coin that you think is going to go up in value. So when Bitcoin drops below that threshold, then you become a spec miner. And so spec mining is pretty popular amongst like a lot of the POW coins or proof of work coins, like Tube. Raven was a really popular spec coin, and then it went up in value by quite a bit. But so when it drops below in value, people will start to take a loss, like negative 75 cents per watt that they're mining, so that because they believe in the long-term value of Bitcoin. So I think that long term, I think that you'll find efficiencies. I don't think the price of Bitcoin really matters to, you'll see mining companies go out of business. Like we just saw Gigawatt. I don't know if you saw the news story on Gigawatt, but they declared bankruptcy. They did a $22 million ICO.
Yeah, I'm in a class action lawsuit with Gigawatt. I know all about that.
You have a class action lawsuit?
Yeah, I'm the chair of the class action lawsuit.
Oh, hell yeah.
So
There's the chair, guys.
I mean, yeah, yeah. So, but anyway, back to that. I think, like I said, in a free market, some people are going to go under with mining. Some people are going to are going to be profitable with mining, and I think because of the game theory, as people drop out, the difficulty goes down. More people make money.
So how are you playing this? You're the long-term fundamental investor.
Yeah.
And I think just to get my point across before you go into your investing narrative, the one thing about investing in this market is it's not like traditional. No one's going to come in to bail it out. And that's a big difference between this and securities. So what we got to see is we've got to see some catalysts. I think we've got some massive catalysts that people are ignoring. They're focusing on the price, but they're really forgetting these things that we keep talking about, like Fidelity, like Backed, there was like 2 new institutional products that are coming out, but there's a lot of stuff that's getting built on this thing.
Yeah. So the way that you do it, right? There's you can invest and you can trade, right? That's it. And I always like to use real estate. I was a big time I still am big into real estate. And you have people that invest in real estate, like buy and hold forever, and you have guys that fix and flip, and that's kind of like trading and investing. And those principles always remain the same. So the first thing you're asking my perspective and what I do and what I recommend. First of all, it's about perspective. And what I mean by that is you need to have a long time horizon. If you got in at the end of 2017, you saw the parabolic blow off top. So markets rise and fall, rise and fall. Markets always cycle, rise and fall. Once they fall, they consolidate. They slowly build up momentum. And at the very top, we call it a blow off top. They go super fast, they crash, they consolidate, and slowly go up again. So at the end of 2017, it was like magic. I buy it today, and a month from now, I make money. But that's just not realistic. I do believe we'll get there again, but over time, it's going to start slow and we'll ramp up to that. So it's about perspective. And what I mean by that is I just mentioned I'm in an oil deal, right? So I'm in this oil field, and we're drilling for wells. We have 6 wells going. We need to get more wells going. It's been a year and a half. I haven't made any money on that deal yet. Like, I believe I'm going to make a lot of money, but it's been a year and a half. I haven't made any money. When I was developing real estate, some of these projects would take 3 or 4 years for me to buy the land, rezone it, get the studies done, hire the architects. I mean, it could be 3 or 4 years. So I'm used to having these long time frames of returns. I've had $8 million businesses. I've had Fortune 500 exits, and I've had businesses that I've had to run for a year or 2 without profits. And so I know that this is a new technology, and I believe that it's going to make more wealth than I've ever made on any other investment. I mean, it already has. But I'm prepared to wait for years for that to happen. So that's the first thing. The second thing is that it's about position sizes. So I had to learn the hard way. In 2008, I lost everything. Not only did I lose everything, I was millions of dollars in debt because I had all my assets in real estate, 100%. And so now I don't do that anymore. I had to learn the hard way. And so now I have about 10% of my money in crypto. So even if all my crypto went to zero, it would suck and I wouldn't be happy, but I'd lose 10% of my total investable assets, and that wouldn't wreck me, right? So that's the second way to play it. Does that make sense?
Yeah, absolutely. So for me, I believe the same concept. One thing that I always say is if the profits that you've made in an investment are enough to change your life, take some profits.
No one ever went wrong taking a profit.
And so that's like my first rule, because people thought I was like crazy for selling some of my like bigger long-term holdings, but anytime it's enough to change your life, you should always take profits. But if you haven't sold all year, now is not a great time to sell. Even if Bitcoin goes to 3,000, 2,000, we're much, much closer to the bottom than we are to all-time high. There's a lot of things that are showing us there's a lot of things showing us that we may be pretty close to a capitulation, high volume capitulation candle, which we should see a nice rebound and bounce off of. So, if you haven't sold your Bitcoin all year, now is not the right time to sell. Now is the time to cost average in, to average in. If you bought it, 15,000 and you bought some more at 10, now's the time to average in with your 4,000 buys. And I'm not a buy the dip kind of guy.
What you said just there was the key point, and that I was going to add is averaging in, right? So as an investor, that's really kind of where that secret comes in, right? So like you just said, right, if I had bought at 15 and now I can buy at 3, now my average cost is like 6 or whatever it is, probably different, but you know what I'm saying? So I can buy in lower and I can bring my average cost down. And what happened is, so you always want to think about like percentages. Like I want 10% of my liquid net worth in crypto. Well, because it's lost so much value, now it's only 5%. Right. So now I need to bring that 10% back up. That means I need to put fresh money in. So that fresh money buys in at a lower price, which then brings my average cost down, and it's super powerful that way.
Yeah, and I believe I'm a long-term believer in Bitcoin. I wouldn't be building businesses in around the cryptocurrency markets if I didn't think that it was a long-term investment. And I've been early on a lot of really good long-term fundamental investments. And right now, I just don't see anything better than Bitcoin. There's some like tech startups I'm watching. There's the cannabis industry, from the extraction side to the farm side. I don't believe in buying the stocks. I think those are way overpriced and way overhyped. I think investing in some of the infrastructures of the cannabis industry is a good idea. CBD, the way that the opioid market has kind of exploded, and the fact that it's so addictive, I think the CBD has a big place. But other than that, I still think that Ethereum, with as the backbone platform of a decentralized internet, and there's so many applications building onto Ethereum. And it only takes a couple of them if they can grab, user base. But yeah, so I'm a big fan. But one of the big things that doesn't get talked about a lot, and why I'm so bullish is a lot of civil liberties are being encroached upon right now. The First Amendment, you're seeing a lot of shadow banning on YouTube, Twitter, Facebook. Accounts are just getting fully deleted. And these aren't just small followers. These are people with like 300, 400, 500,000 followers. And so having that ability to not infringe on civil liberties, privacy completely being eroded. And not in the sense that I have things to hide, but in the sense that all of our information is being sold to third parties so that we have no privacy, right? Like, you say a word and then there's ads popping up on Facebook, Alexa hears you, and, you've got ads on Amazon so all of these things. But that's why I'm a huge fan long-term of crypto. Personally.
Me too. I spoke, I was on a panel at the World CryptoCon about a month ago in Vegas, and on my Twitter, they grabbed a little video clip, and it's on my Twitter, and it says why I got into Bitcoin. And basically that's what I said. When I learned about the revolution that I was creating by bringing us back freedom and sound money and these things, that was when I was like, I have to get everybody I know involved in this to help bring this revolution into reality, right? So yeah, sound money, privacy, personal responsibility, all those things.
So, what do you think is?
I got some questions about the averaging in, about capitulation, about waiting until the prices drop lower, all those kinds of things. I want to say something about that, and you can chime in, especially being the technical analyst wizard that you are.
Say that one more time. I didn't hear the first part.
Questions about averaging in, waiting for the bottom, buying, wait till it hits 1,000, all those types of things. And I'll just say what I think, and then I'll let you jump in because I know you're the analyst and you're fundamental and technical. But I would just say that I don't believe, and you can tell me what you think, Jake. But really predicting market tops and bottoms is not realistic. Looking backwards, it's very clear, but at the time, you never know the top or bottom was there until you look backwards. Mayor Rothschild, the head of the Rothschild family, was famously quoted saying, "As I always got out a little bit early." Right, so never trying to be that last bit of squeeze. So, is Bitcoin going to drop to 1,000? We don't know. It could shoot to 10,000. We don't know. Could it go to 1,000? Sure, it could. So to wait for it to go there, it may never go there, and you can wait, but you may never get that chance. So what I think is that you always enter a position thinking about risk and reward. So there is a chance that we see it go down to 3,000 or 2,500, whatever. Okay, even 1,000. So maybe it drops 50% or 60% from here, maybe. But I think getting back to 12,000 is pretty realistic. I think we'll see that probably in the next year. So that means we have a 300% upside and a 50% downside. So that's a good risk to reward. So what you do, instead of waiting for it to go to 1,000, is you plan to layer in buys all the way down to 1,000. And if it never goes, well, at least you've established some buys here, and then you can layer back up. What do you think about that, Jake?
Yeah, from an investing perspective, absolutely. And it depends on the time frame that you're looking at too, right? I mean, could we go lower? Absolutely. But like I said, I think we're closer to the bottom than the top. But like I've said all year, the trend is down. And so we try to trade with the trend, especially in Signal Profits. The trend is our friend. What in the world? I'm getting some weird notifications from a website. I never use that. I always use an encrypted browser. But yeah, so the trend is our friend. So right now the trend is down. There's not much pretty much all year that showed us. I've done like probably 10 number one trading view analysis showing, here's what we need to see a breakout of the market structure. And it never broke out. It's always been rejected. But one of the things, I'm about to do I've got all the research and everything detailed for our members, is a very complex, comprehensive overview and guide on hedging. If you have cold storage like I do, it's on paper wallets. It's very, very hard to get access to. It's in a safety deposit box. I'm not worried about it. This is a 10-year hold. So there's some ERC20 tokens in there. There's some Bitcoin tokens in there. Some other things. There's some things you can do to hedge against your long-term holds. Shorting the market's one of them. On low leverage, taking shorted positions, at tops of markets. And there's some other things, but I'm a big fan of cost averaging in. I wish I would have cost averaged in more during the bull run because, the price gets away from you. And if you're not cost averaging in, like one of our buddies, Robert Beatles, he's bought Bitcoin every week for like 4 years. It doesn't matter if it's 20 grand, doesn't matter if it's 10 grand, it doesn't matter if it's $200. He's literally just every week he buys the same amount and he continues to buy it and he just continues to buy it. And he's got this massive, trove of Bitcoin in cold storage because he just continues to buy it and transfers it over to that wallet. That is not a bad strategy to have, especially with something as volatile as Bitcoin. As an investor, people that invest in Bitcoin should just really understand that there's going to be massive swings from 20K to 3K to 40K to 8K. These massive swings. You can get out, you can get in, you can get out, you can get in. But timing markets is incredibly hard. And if you're not a day trader, and if you've always been an investor, then continue to be an investor. That would be my advice, because hodlers have always been rewarded with Bitcoin. Even if you bought at 20,000 in 5 years, that's probably going to look like a blip on the chart. And I could be wrong. We could be wrong, right? But this is the space that we've chosen.
We could be wrong, which is why we don't put 100% of our assets into it.
Right. Small percentages.
Yeah.
But anybody buying, Amazon and Apple, they're not very happy either. And it's not just the US that's down. The US is, the US, there's a saying that says when the US coughs, the rest of the world gets a sneeze.
Yeah.
We're seeing China equities down 40, 50%. We're seeing Turkey, they're not only their currency, but stocks, emerging market indexes out of Turkey are down 70, 75%. We're talking about sovereign nations. We're not talking about just crypto. So, the best position right now, unfortunately, is cash as the market settles, because as stocks sell off, that typically affects real estate. I mean, you can be invested in bonds, but I think the time to invest in bonds was like last year, December. Precious metals are looking pretty decent, but yeah.
Yeah, I mean, we don't know. The smartest guys in the world are smart enough to know that they don't know. And so that's why you just have to have a range of assets that are, hopefully non-correlated. Given the way the markets are right now, like Jake just pointed out, right, all the markets are shaky right now. So it's a good time to have more cash because we're going to see the world on sale here pretty quickly.
Yeah, and I did an update yesterday or this morning where basically I said, when Bitcoin goes to 3,000 or 2,000 or 2,500, if it does, that's when we'll see the Google interest spike. That's when we'll see the smart money accumulation volume, that massive candle where smart money is buying. When you see the owners of the New York Stock Exchange, Intercontinental Exchange, ICE, when you see all these guys entering, they're all going to be looking for liquidity.
I think they already have. I think they already entered. I think over the last couple months, the OTC buying, the over the counter, the OTC buying has been massive. And we know Fidelity, TD Ameritrade, and ICE, those three companies all announced they're opening up before the end of the year. Well, now back just got pushed to January, but those three institutions are opening up shop by the end of the year. And I believe they've already stocked their shelves. I mean, maybe not 100% stocked their shelves, but I would have to guess they must have already taken massive positions at those prices. And that's where the OTC buying was. And someone had asked about that in the thread, in the chat here. So they don't buy all that OTC and then dump on the markets. I suppose if you wanted to manipulate the markets, you could. But I believe all that OTC volume that we've been seeing are these institutions buying and stockpiling. And I think Pompliano talks about, maybe with him and Murad, they were talking about, like, it's almost like a game of musical chairs. I mean, there's only going to be maybe 16, 17 million coins ever at one point, and that's not even enough for all the millionaires in the U.S. to have one. So imagine when, like, institutions want to grab like 100 of them. Like, the music's going to be shut off, and there's not going to be any chairs to go around. So I think it's going to happen sooner than you think, or than most people think.
No, I agree. Now, one of the things that I was doing a really in-depth analysis. I spent a while just analyzing Bitcoin, previous trends. We may have found bottom where we're at if we can hold this 4,500, 4,600 level based on previous retracements. If we don't hold this 44 to 4,600 area, then I definitely think that 3,600 will probably be the best buying opportunity. I can't see it going down to 1,000 or 800 like a lot of these people are saying, just based on all of the historical trends with Bitcoin and based on the fact that the Van Eck ETF may be coming and some other things. But so I think that we're at or near where we should be, I think if we can move sideways, anything's possible with Bitcoin. And that's the craziest part.
And I've always said from the beginning that, and I used to be, I'm going to quote, I used to be more of like a blockchain guy where I was really big on all the little crypto assets. And I still think there's some amazing opportunities there. But I've become more of like maybe a Bitcoin maximalist. Not that I am, but I've kind of moved more towards there. But I recognize, and that's because I recognize how amazing and powerful Bitcoin really is. But because of that, I also recognize the threat that it is to the establishment. And at some point, they're going to throw every tool in their arsenal at this. So, I mean, you're not going to disrupt the financial system. They're not going to just roll over and die without spending every ounce of their being to fight it. So, it's definitely going to be a war for sure.
Yeah, and the problem is there's so much infighting that it's not a cohesive system right now.
Yeah.
There's there, like, from the Bitcoin Cash to all of these altcoins to all these other things, we really need a very cohesive system and structure for Bitcoin, because a lot of the devs are now working mostly on Ethereum, or they're getting taken away from other projects. So I think that cohesiveness is a big part of what will succeed with crypto, but maybe not.
So ultimately, I think at the end of the day, what I continue to tell people is, like, really, when you're investing in a technology cycle, it's different than other things, and price doesn't give us a good picture as to what's happening. Because if I'm investing in a technology cycle, that means I believe in the future this technology is going to achieve this, and I'm going to invest till it happens. But price doesn't keep us up to date with how that technology is progressing. And so really what we have to do, if we invest in this technology for the future, it's going to do this thing in the future, then I have to wait until that happens. And really what I want to do is I want to watch the innovation and adoption that's happening, not the price. The price is a horrible indicator. And I think I tweeted yesterday and I said that volatility, the price is going up and down, and we call that volatility. Volatility is the difference of reality and perception. And so at the end of last year, the reality was here. Like, the fundamentals were here. We weren't really that far along, but the price, the perception, was way up here. Today, even though the fundamentals have gone up, now the price is below it. And so I just continue to urge people to watch the innovation and the adoption. And, like, on the innovation side, I don't think we have scaling problems anymore. Like, the Lightning Network's awesome. We're seeing, with things like, smart contracts and stuff being put on Bitcoin.
Rootstock just got listed on Bitfinex.
Yeah, so we have scaling solutions in place. We have smart contract solutions in place for Bitcoin. Ethereum, I don't think has scaling solutions either. We have privacy solutions. We have interoperability chains. I believe that the innovation has gone by leaps and bounds this year, as well as the adoption. Because, like I said, with TD Ameritrade, Fidelity, they're going to bring in millions and millions of people, potentially trillions of dollars. So that's innovation and adoption is happening. And at some point, the reality or the price, the perception will catch back up. And so when you can understand that, how that works, that's how you find the opportunities.
Yeah, I mean, volatility is a trader's best friend when you can play both sides of the market, and that's what I keep saying about the US market is tough, because you've got like liquid.com and you've got Kraken, but you really want more volume to be able to trade safely and comfortably, especially with those larger position sizes. And that comes down to like institutional trading, like if you wanted to take a 20, 30, 40, $50 million position, you have to buy OTC, but and I've been following the OTC market, and there's like no sellers.
Yeah, they know. They're smart. Like, who? I saw someone tweet about this, and they're like, just know that every time you sell, someone else is buying, right? Who's buying, right? Like, people know, dude. Like, on the OTC level, the smart money or whatever, like, they ain't selling. Like that meme from Leonardo DiCaprio from Wolf of Wall Street, right? Like, I ain't selling. Like, anyway.
But the other thing is like, we've got our viewers here, we've got people on Twitter, but the amount of people that actually bought Bitcoin was actually incredibly low. Now everybody was aware of it because everybody was talking about it. Right. So like the Bitcoin was on the tip of everyone's tongues last year, this same time, Thanksgiving, Christmas. There were very few people that talk about it because awareness does not equal participation, especially in the financial markets, especially with the confusion with cold wallets and storage and all that stuff. It takes, the early adopters, we were rewarded, but we're also punished. Right. And I think that that's a big part of it is, very few people actually got into it. But now what you're going to see, and this is what a lot of people aren't aware of, is when we get these ETFs, when we get these institutional products, now you've got RIAs that are going to open up, which I don't know if our viewers know what RIAs are, but these are registered investment advisors. This is where you can take money from your 401k, your Roth IRA, and you can put it into indexes around crypto. And that's where you're going to see the money start to come in. Once the financial advisors, the fiduciaries, and the brokers, once these guys get some products, then it's going to be like sliced bread, right? That's what made gold so popular. That's what made a lot of these things so popular, is once they start to introduce these mutual funds. These things were not that popular until they got these products and they started investing in them. So
yeah, I agree. And I don't think we need the institutions. I don't want the banking industry getting in. But that's not to say that as soon as these guys light it up, it's going to just bring in a flood of people, because getting into crypto is hard. It's not that easy, and people want easy. So, should we take some questions?
Yeah, we'll take some questions in chat. Let's see.
Someone wanted to touch on XRP and why the price hasn't dropped like a lot of the rest of the coins. I would say that each coin has kind of dropped different. Why do some drop more than others? It's all speculation. But
because XRP the standard, bro.
The XRP army is fierce, and they're protecting that price super, super hard.
No, I have issues with Ripple. I was a Ripple fanboy for a long time. I mean, I was Ripple fanboy before it was popular to be, a Ripple fanboy, before most people even knew what Ripple was, maybe like 2016-ish. But the way that the company itself is like taking this like weird like walk backwards on XRP token. They're saying that they never created the XRP token. They're saying that they were gifted a large amount of XRP token. Very, very odd, like their stance that they're taking on the XRP token. I feel like they should just kind of like own it. But one of the things with Ripple and Stellar is that they have massive pools of tokens, right? So Bitcoin has 21 million that'll ever be printed and sold. Ethereum, they have more, but not nearly as much as Ripple. Ripple and Stellar, I think, both have 100 billion. And Ripple, the company, owns 60 billion that are on escrow or whatever that they can sell and do whatever they want with. But the thing with that is with a larger number of tokens, it's hard to like tank the price dramatically, especially with arbitrage opportunities. But I don't think that Ripple is going up in value because Ripple, the company, has done anything to prove its value yet. There may be large institutions buying it on speculation, but
I think what you just said is also a big piece of it, though, because they're artificially manipulating the volume. So like they pre-mined it, so there's 100 million coins, and what they do is they hold like 60 million of them right now to artificially create this supply demand. Where Bitcoin, all the Bitcoin's on the market. There's no one artificially playing with supply and demand, but Ripple, they do. So that's a big piece of it as well.
Yeah, I mean, it's not like it's like appreciated like crazy. People are like saying like XRP's like going to $589. Like it's still like 41 cents. Like, I mean, it was $3.50 on South Korean like FOMO, but it's, in Bitcoin value though, it's actually done really well. It's held pretty stable, but I held Ripple, unfortunately, and it tanked like 97% in Bitcoin value. I think November last year, the price never dropped below like 20 cents because Bitcoin was going up in value. But that was one of my like cold storage coins that I was holding for a long time. But when it went up to $3, I definitely sold out of most of that. But so but I really like what Stellar's doing. But Stellar's another one of those coins where like 95% of the crypto, 95% of Stellar is like centralized into like the top like 10, 15 wallets. So I like to support projects like Raven Coin, Decred, Bitcoin, because they were very fairly issued coins. There was no pre-mine, no ICO. It was just, they built the crypto, and then they sent out a GitHub and a Bitcoin talk forum announcement saying that their coin is live. Here's what it does, and I like that aspect. But
Yeah.
that's from a perspective of what is it, being fair, right? But in capitalism, nothing is ever really fair.
Right.
They're always going to look for that, edge. And so it's really hard to say what token is actually like has its real value, because I know a lot of the tokens hired market makers in Southeast Asia to pump the price of their coin to certain levels.
Yeah.
And you could see that by the way that they fit Fibonacci sequences, because that's all like algo trading. So when you have like a quant fund that's using that becomes your market maker and they get paid, well, they can like pump it and hold it at a certain level and they get guaranteed money. And so XRP could be doing that right now. They could have market makers that are, holding the coin at certain levels using high frequency trading and quant trading algorithms. So hard to say, man. It's really hard to say like what the true value of any of these tokens are, because it's all speculative. The highest number of users for an Ethereum program is IDEX, and it's only got like, I think 65,000 users, and then second is CryptoKitties, and then third is like a casino or a gambling token.
Yeah. Someone else asked why Rootstock isn't listed on CoinMarketCap.
Good question. I'm not sure yet.
I think that's because what I would say is because it's like, why isn't Lightning Network listed on CoinMarketCap? It's more of like a service, like product, and not like a cryptocurrency coin. And not every cryptocurrency product needs to have a coin, right? So they fit into that bucket, I guess.
I think that, one thing that bothers me is I think we would have seen a lot of highly successful companies if they'd done like a Reg D, Reg S security offering, where if they would have given away equity or whatever, I think that they would have been like massively successful companies that didn't need tokens from some of these trading platforms to, I don't know, but that's one thing that bothers me. I feel like they could have, there's so many of these that should have just been companies and not tokens. Like 99% of them didn't need tokens.
Yeah. I've been getting a couple questions about Veritasium. A lot of people have been asking about that. They have a new thing that's V Gold, tokenized gold. A bunch of people are doing.
I know what Veritasium is, Reggie. Reggie's a very smart guy. He's been in crypto for a long time, but I think Veritasium is a scam. Personally, I don't know.
I have never seen it get any traction. They haven't made any good partnerships. I haven't really seen any like real world stuff actually happening. I don't see any good updates happening. They have the new gold thing, but everyone's doing gold right now. I just don't see any.
Their platform is like super confusing, man. They've got like 8 products, 8 projects. I don't know. It's very confusing.
Yeah, they're trying to be everything to everybody. It's just too much, I think.
We've got. Let me see. What's a good Excel program to track your coins? Ricky Thompson says.
I wouldn't use Excel. I think cointracking.info is really good. You can go
cointracking.info is good.
Yeah, you can use an API to go to your exchanges and just feeds all the data right in for you.
Yeah. You know what we should do? We should do a video on security tokens. I've been studying security tokens like crazy lately.
I think security tokens are going to be a massive opportunity for us in 2019. It's just right now, it's not really taking off yet.
Well, man, security tokens are just going to be the same as ICOs. You're going to see a lot of scams. And so that's where it's going to be very, very important to understand like the diligence that's going to have to go behind these. They're just like ICOs, except they're regulated securities.
And that doesn't make them safe.
Doesn't make them safe.
I've lost plenty of money in that stuff, so it's not safe.
Okay, let's see. A lot of people are saying Bitcoin's going down. The TA is showing that. Mikey Dent says, I don't trust any Chinese crypto now after watching the China Hustle on Netflix. I haven't seen the China Hustle. I'll definitely check that out, Mikey.
Yeah, I haven't seen it either.
It sounds cool though. I've been watching a lot of cool documentaries on Netflix. Watched one called like the Greed or something like that. That one was pretty cool. First episode was about HSBC, and it like basically like they knew about Mexican cartels using HSBC banks to launder money, and they just didn't care. Even when it was like brought up like multiple times, they just didn't care. And that's one thing, if you ever listen to Craig Wright talk, he talks about like fungibility, and he talks about having money that can't be used for illicit purposes and regulated. Obviously, we know that cash is one of the biggest things to be funding terrorism and all that stuff. But he talks about having an analytical program built into his Bitcoin Cash SV that will allow tracking so that it can't be used by terrorists and all that stuff. So I thought that was pretty interesting. But
yeah. Oh, and someone, Jason's asking about the Bitcoin halving coming up in the next couple of years.
2020.
Yeah, so I mean, what we've seen historically is every time the Bitcoin halving happens, basically it lowers the inflation rate. So I think it's at what, like 3.7 today, and it goes down to 1.8 or whatever it is. So the inflation rate goes down. It means the amount of Bitcoin being produced every day, the amount of Bitcoin being produced and dumped on the market every day gets cut in half. So right off the bat, when you see the inflation rate drop, that should hopefully bring the price up. Supply and demand is real basic. And history shows every time a halving has happened, that prices go up.
Yeah. There is like, I mean, if you ever look at like the meme chart, I think I was probably one of the first YouTubers to explain the emotional market cycle of trading. Probably back in, I don't know, October or something, November. I can't remember. But if you look at that emotional market cycle, the big market cycle point that we're going to see is the disbelief phase. Once Bitcoin starts to rally again, very few people are going to buy it because they're going to just say, this is a fake out. This is, trapping. This is a bull trap. No one's going to. And then it's gonna continue moving up and continue moving up, and that disbelief phase is going to be it's going to be extended because so many people got wrecked so hard, and it was the first time ever trading, it was the first time ever investing, that once Bitcoin starts to go up, people are going to say, no way, it's going to make new lows. It's this is not the end of the bear market, and that's the phase that a lot of people are not going to recognize when it hits us.
Yeah. I'm not really getting any other questions. I kind of want to get going. Do you got any other questions on your feed?
Let me see. You guys have any questions before we end? Why do you guys not talk about the offshore money problem that Bitcoin tackles? There's about $30 trillion in offshore accounts.
I do talk about it. So go to Market Disruptors, look at the new video series I'm doing. On the video 2, I lay out how crypto gets to 100 trillion and what markets it's going to disrupt and how it's going to pull money from each. And I specifically talk about that market. So yeah, we got it covered. Go check it out.
If you have not seen his 4-part video series, definitely head over there. Make sure you subscribe to his channel. He is the fundamentalist of fundamental investors. You're not going to hear any more sound, rational, logical reasoning behind crypto from anybody else. Now, one thing is we do have a Black Friday special going on with Signal Profits. If you guys have not seen our new website, I wanna show it to you. We spent a lot of time and effort on it, but If you head over to Signal Profits, you can see our news site. But inside, we've got a couple different areas. So we've got trading, we've got investing, we've got training. There's going to be a lot more coming with training. Like I just mentioned, I'm doing a very complex, comprehensive hedging video, but we're going to have a full trading in there. We've got a referrals program. So anybody that you guys refer in, you can actually make a little bit, just like anything, just like PayPal, Venmo, or anything like that. And then we've got a full Discord community, very active community of people in there. But this sends out alerts, notifications. Every day we send out an update on the state of the markets. But we have a Black Friday special. I'll post the link in the chat. But it is a great deal on the 6-month program for the trading. And then make sure you guys get on our email list, because we do have some surprises, not just today, but tomorrow. And then for Cyber Monday, we've got probably the best offer we've ever given.
Definitely the best offer we've ever given.
We'll probably ever give. It's kind of bear market inspired. But yeah, appreciate you guys watching. Let me see if there's any other questions. Yeah, I might be I don't know if I even talked to you about this, but I might be a producer, not a producer, but I might invest in the second movie. Did you ever see Banking on Bitcoin?
I did. Yeah, it was good.
Yeah, so the guy's making another one that's called Banking on Blockchain.
Oh, really?
Yeah, so and I might be investing in that movie.
Wow, nice.
I have the details. I got to send you the details. Hey, thanks for watching, guys. Make sure you hit like. Make sure you head over to Mark's channel and subscribe. And anything else, man? Anything else you want to cover?
You can follow Jake on I Love Crypto, and follow me on Market Disruptors.
Yeah, and for anybody in my chat, make sure you make sure you like. I forgot what I was gonna say.
Make sure you like these videos. Also, I love comments. So if you guys if you didn't get your answered question in the chat, leave me comments. I'll answer every question in the comments. We can have discussions in there. So I really like that. Leave me comments and make sure you give me some likes and thumbs up.
Yeah. Cool. Anything else, man? Any ending?
That's it. I think history is going to prove that this is a great opportunity to get in. I think market corrections are great for people that miss their entry, and so I think I just urge people, go back and watch that first video I did about the 4 phases of tech cycles so you can get the perspective.
He wrote a huge guide too. So if you don't have that guide, make sure you head over there. There's a link to this guide. It's called How to Get Rich from Tech Cycles. Super awesome guide. I definitely recommend checking that out. It's also in the on our website under special reports. We write special reports every now and then for our members.
And I'm excited about 2019. I know we're in a bear market and it sucks, but I'm excited. Keep your positions appropriate for your allocation size, and I think we're all going to come out ahead on this thing.
Yeah, especially remember that Bitcoin went from 5K to 20K in about 45 days. So even though we're at 4.4K, it's not out of the realm of possibility to even if it gets down to 3K. I mean, what it did in 2017, this is, especially with all the institutional stuff coming in, don't get complacent, don't get lazy. If you guys saw my last trading view post, we did short from 6,300. And I just closed my short like a couple of days ago, but you want to stay as present as possible with this stuff. You don't want to just kind of what, crypto's dead. You just want to make sure that, you're staying present as possible, because these things can move so fast. And like I said, that disbelief phase will catch a lot of people out of here.
Yeah.
Yeah, cool. Hey, thanks for watching, guys. Appreciate it. And I'll see you guys on the next video.